Welcome, everyone. Today we are looking at a very important topic, double entry system. This is one of the most fundamental topics in accounting. It is the foundation upon which all other accounting is built. This topic is guaranteed to appear in your examinations. You must understand it thoroughly. Pay close attention. Let us begin. First, let me explain what the double entry system is. The double entry system is a method of recording financial transactions. It is based on the principle that every transaction has two effects. One effect is a debit. The other effect is a credit. For every debit, there must be a corresponding credit. The total debits must always equal the total credits. This is why it is called double entry. There are two entries for every transaction. This system ensures that the accounting equation always balances. The accounting equation is assets equals liabilities plus owner's equity. The double entry system is the standard method used by businesses around the world. Understanding the double entry system is essential for understanding all of accounting. Let us now examine the principles of the double entry system in detail. Now, let me explain the basic principles of the double entry system. There are several key principles. The first principle is the duality principle. This means that every transaction has two effects. These effects are opposite and equal. The second principle is the accounting equation. The accounting equation must always balance. The third principle is that for every debit, there is a credit. The total debits must equal the total credits. The fourth principle is that assets and expenses have debit balances. Liabilities, equity, and revenue have credit balances. This is the rule of debit and credit. The fifth principle is that the double entry system is based on the personal, real, and nominal accounts. Understanding these principles is essential for understanding how the double entry system works. This is the foundation of all accounting. Now, let me explain the rules of debit and credit. The rules of debit and credit tell us which accounts are debited and which are credited. For assets, debits increase the balance and credits decrease the balance. Assets have a normal debit balance. For liabilities, credits increase the balance and debits decrease the balance. Liabilities have a normal credit balance. For owner's equity, credits increase the balance and debits decrease the balance. Equity has a normal credit balance. For revenue, credits increase the balance and debits decrease the balance. Revenue has a normal credit balance. For expenses, debits increase the balance and credits decrease the balance. Expenses have a normal debit balance. The mnemonic is dead. Debits increase expenses, assets, and drawings. Credits increase liabilities, equity, and revenue. This is a useful way to remember the rules. Understanding the rules of debit and credit is essential for recording transactions correctly. This is frequently tested. Now, let me explain the types of accounts. There are three main types of accounts: personal accounts, real accounts, and nominal accounts. Personal accounts are accounts for people and organizations. Examples include debtors and creditors. The rule for personal accounts is debit the receiver and credit the giver. Real accounts are accounts for tangible assets. Examples include cash, land, and buildings. The rule for real accounts is debit what comes in and credit what goes out. Nominal accounts are accounts for expenses, losses, income, and gains. Examples include rent expense and sales revenue. The rule for nominal accounts is debit all expenses and losses and credit all income and gains. Understanding the types of accounts is essential for applying the rules of debit and credit correctly. This is a key concept. Now, let me explain the format of ledger accounts. A ledger account is a T account. It has two sides. The left side is the debit side. The right side is the credit side. The account has a title at the top. The debit side records debits. The credit side records credits. The difference between the total debits and total credits is the balance. If the total debits exceed the total credits, the account has a debit balance. If the total credits exceed the total debits, the account has a credit balance. The ledger account is used to summarize transactions for each account. The ledger is the principal book of accounts. Understanding the format of ledger accounts is essential for posting transactions. This is a practical skill. Now, let me explain the steps in the double entry system. There are several steps. The first step is to identify the transaction. You must determine what has happened. The second step is to identify the accounts affected. You must determine which accounts are involved. The third step is to determine the effect on each account. You must determine whether each account is increased or decreased. The fourth step is to determine whether to debit or credit each account. You must apply the rules of debit and credit. The fifth step is to record the transaction. You must enter the transaction in the books. The sixth step is to post to the ledger. You must transfer the information to the ledger accounts. Understanding these steps is essential for recording transactions correctly. This is a key process. Now, let me explain the advantages of the double entry system. The double entry system has many advantages. The first advantage is accuracy. The system ensures that the books balance. This helps to detect errors. The second advantage is completeness. The system records both aspects of every transaction. This provides a complete record. The third advantage is control. The system provides a check on the accuracy of the records. It helps to prevent fraud. The fourth advantage is information. The system provides detailed information about each account. This is useful for decision-making. The fifth advantage is profitability. The system helps to determine profit or loss. It provides information for financial statements. The sixth advantage is comparability. The system allows for comparison over time. Understanding the advantages of the double entry system is essential for understanding why it is used. This is frequently tested. Now, let me explain the disadvantages of the double entry system. The double entry system also has some disadvantages. The first disadvantage is complexity. The system is more complex than single entry. It requires training and skill. The second disadvantage is cost. The system requires more time and effort. This increases the cost of accounting. The third disadvantage is difficulty. It can be difficult to identify the correct accounts. It can be difficult to apply the rules correctly. The fourth disadvantage is errors. The system does not prevent all errors. Errors can still occur. The fifth disadvantage is interpretation. The system requires interpretation of transactions. This can be subjective. Understanding the disadvantages of the double entry system is essential for a balanced view. This is a key concept. Now, let me explain the difference between the double entry system and the single entry system. The double entry system records both aspects of every transaction. The single entry system records only one aspect. The double entry system is more accurate. The single entry system is less accurate. The double entry system provides a complete record. The single entry system provides an incomplete record. The double entry system is the standard method. The single entry system is used by small businesses. The double entry system helps to detect errors. The single entry system does not. The double entry system is more complex. The single entry system is simpler. Understanding this difference is essential for understanding the importance of the double entry system. This is frequently tested. Now, let me give you examples of double entry transactions. Let me give you some examples. Example 1. A business starts with cash of $500,000. The accounts affected are cash and capital. Cash is an asset. It increases. Therefore, it is debited. Capital is equity. It increases. Therefore, it is credited. The entry is debit cash $500,000 and credit capital $500,000. Example 2. A business buys goods for cash of $100,000. The accounts affected are purchases and cash. Purchases is an expense. It increases. Therefore, it is debited. Cash is an asset. It decreases. Therefore, it is credited. The entry is debit purchases $100,000 and credit cash $100,000. Example 3. A business sells goods for cash of $200,000. The accounts affected are cash and sales. Cash is an asset. It increases. Therefore, it is debited. Sales is revenue. It increases. Therefore, it is credited. The entry is debit cash, 200,000, and credit sales, 200,000. Example 4. A business pays rent of 50,000. The accounts affected are rent and cash. Rent is an expense. It increases. Therefore, it is debited. Cash is an asset. It decreases. Therefore, it is credited. The entry is debit rent 50,000 and credit cash 50,000. Understanding these examples is essential for applying the double entry system. This is frequently tested. Now let me explain the accounting equation and the double entry system. The accounting equation is assets equals liabilities plus owner's equity. The double entry system ensures that the accounting equation always balances. Every transaction affects the equation. Some transactions increase assets. Some transactions decrease assets. Some transactions increase liabilities. Some transactions decrease liabilities. Some transactions increase equity. Some transactions decrease equity. The double entry system records these changes. The equality of debits and credits ensures the equality of the accounting equation. This is the fundamental principle of double entry. Understanding this relationship is essential for understanding the double entry system. This is a key concept. Now let me give you sample exam questions to prepare you for your test. What is the double entry system? The double entry system is a method of recording financial transactions based on the principle that every transaction has two effects. State the rule of debit and credit for assets. Debits increase assets, and credits decrease assets. State the rule of debit and credit for liabilities. Credits increase liabilities, and debits decrease liabilities. State the rule of debit and credit for expenses. Debits increase expenses, and credits decrease expenses. State the rule of debit and credit for revenue. Credits increase revenue, and debits decrease revenue. What are the three types of accounts? Personal accounts, real accounts, and nominal accounts. State the advantages of the double entry system. Accuracy, completeness, control, information, profitability, and comparability. Explain the difference between the double entry system and the single entry system. Double entry records both aspects. Single entry records only one aspect. Let me summarize everything we have covered today. The double entry system is a method of recording financial transactions. Every transaction has two effects. One is a debit, the other is a credit. The rules of debit and credit depend on the type of account. Assets and expenses have debit balances. Liabilities, equity, and revenue have credit balances. There are three types of accounts: personal accounts, real accounts, and nominal accounts. The ledger account is a T account with a debit side and a credit side. The double entry system has many advantages. It is accurate, complete, and provides control. The double entry system ensures that the accounting equation always balances. Understanding the double entry system is essential for all of accounting. This is the foundation of the accounting profession. Study it well. It is guaranteed to appear in your examinations. Well done.